Today's topic is about buying a home and your qualifications. So, how do you know if you qualify to purchase a home, especially the one that you've been dreaming of, or you see something on the market, you're driving around, you see an ad in a newspaper? Can you afford this home? Well, more likely than not, this is going to be the biggest investment of your life and probably has the most meaning in terms of the dollars spent and it's going to be a place for you to live. So it's just more than money for basically anyone. Well, one of the things you need to do is kind of know some of the basics of home buyer affordability. So you have a purchase price. Along with the purchase price, you might have assets where you can buy the entire home based on whatever purchase price it is with the bank account that you have or funds that you have inside of any type of financial vehicle. However, for most folks, they're doing some type of financing, okay, a mortgage. There's different mortgages that are out there. I'm not going to go too much into those today, just going to go through a typical scenario where you actually have a 30-year fixed mortgage. All right. So a 30-year fixed mortgage, you're amortizing your loan over a 30-year period to pay the house off. And in the very beginning, most of that payment is going to interest. Only a little bit is going to principal. And as each month goes by, slowly but surely, it flips around and more money's going to principal and less to interest until you finally pay that off. But now let's talk about the subject of affordability because that's what will get you into the home. And speaking of getting into the home, you would need to be pre-approved or pre-qualified through your lender. If you expect a realtor to go ahead and spend their time and take you around to go visit a house, one thing that a realtor does not want to do because they're paid on commission is that they don't want to take an unqualified buyer, and you yourself just don't want to waste the realtor's time and your own. You're going to want to know if you're qualified because if you are qualified, great, you can make an offer with a pre-approval letter, or what you can do is work towards how you're going to make a plan to make things affordable for you, or maybe look into a different home. So number one, you're going to want to write these basic rules down. One of the rules you want to actually look at when you're purchasing a home, for the most part, if you're going through a conventional loan, there's different loans that are out there, is a debt to income ratio. Okay, the typical debt to income ratio, that standard is 43%. 43% of what? 43% of your gross income. So say for example, you had a gross income, meaning before taxes, of $10,000 a month, making $120,000 a year. You would take that your monthly figure, 10,000 a month, times 43% or 0.43, which would give you $4,300. That $4,300 monthly figure should be the cost of your mortgage, your property tax, your insurance, any HOAs, and any monthly obligations that you have on your credit report. That total should not eclipse 4,300. Okay, if it does, then more than likely you do not qualify for that home under a conventional mortgage. Okay, but let's just stick right there. Okay, so how do you figure out what your mortgage is going to cost? So say for example, you have you know, a $500,000 house. And let's say rates right now are at 6.5%, okay, 6.5%. Then what you could do is go to Google and just and then just type this in here, mortgage calculator. It's going to ask you for things like what's the purchase price of the home, how much money you're going to be planning to put down for a down payment. So let's say you had a $500,000 house, and in a conventional loan, they want you to put down 20%. That's $100,000. Then you'd have a $400,000 loan at 6.5% interest. You're going to be plugging those numbers in. It's going to spit out a number for you, which I can do for you as well. So let me just do this live. Okay, so on a $500,000 house, you're putting 20% down. Okay, let's just say the rate is 6.5%. 30 years, you want a monthly payment. Typically, property taxes are calculated at 1.25 percent of your purchase price. So so if you had $1 million property, 1.25%, 10,250, just split that in half, 5,125. Insurance is typically calculated at 0.35% of the purchase price. So you had $1 million home, that's 3,500. Go ahead and split that in half. Okay. So, anyways, your principal, interest, taxes, and insurance, typically known as PITI, what actually ends up happening there is that your total expenditure is going to be $3,194.94. I'm just going to round it up to 3,200. So you still have $1,100. Okay, so what if you have HOA and that HOA is 300? Then you add that to the 32, you're at 3,500, you qualify. What if you have a $1,000 car payment and now you'd be at 4,500? At 4,500, you're not going to qualify. Okay, so either find a way to get that car payment down, pay it off, maybe refinance that car payment so it's a lower payment. But typically, what you would want is all of your expenses to be under that 43% or under 4,300 so that you actually qualify. What would you do? Well, to do that, well, what you need to do is go see a mortgage lender, a responsible mortgage lender who specializes in purchases. Not all mortgage loan officers or lenders actually do. Some of them strictly are refinance and they don't have a lot of comfort in a purchase. It's important that you work with a recommended lender who has purchase experience because sometimes things happen in a purchase unexpectedly, like a low appraisal, or you have issues with particular HOA, or you might have something on your credit. You're going to want a loan officer who is experienced there to maybe see some potential pitfalls and come up with some solutions for you. But now that you've seen your lender, you have your pre approval letter, what do they need to do to get you that pre approval letter? Well, a few things. They need to go ahead and take your application. They're going to ask you things like the last 2 years of where you lived. They're going to ask for your social. They're going to ask for your date of birth. They're going to ask the last 2 years of your employment. They're going to ask for what your income is. They're going to ask for what your financial assets are for the down payment. They take that in an application called a 1003. They submit their findings into their proprietary site. It tells them, now can you qualify? All right. They're going to want to see some documents from you, and those documents are going to be at least your last 2 months bank statements, at least your last 2 months assets, where you're keeping your money. They're going to want to see also your last 30 days pay stubs and your last 2 years tax returns and W-2s. Okay. So you're going to submit that all into your responsible loan officer. They're going to take that information. They're going to go ahead and qualify you. Now, let's say you're qualified. They now produce a letter. You take that letter and you see your realtor. And once again, I would say make sure you're speaking to someone responsible as a realtor, as not all realtors are created equal. Some have a lot of experience. Some have, more experience in the places that you're looking to buy. I would say you know, look up realtors and maybe take a recommendation from someone who's used a great one, or look at some reviews of realtors in that area where you're looking to buy, as they know the community. They might have some insight on there. They might have better negotiating. They might, you know, have some valuable experience there to help you get your purchase done. Now that you're ready to make your purchase, you and the realtor will submit your pre approval letter along with the offer letter from the realtor. And from there, usually it's the best offer that wins. And sometimes it's not, because maybe you're a person who just wants to do it as an investment, and maybe the person selling the home wants to make sure it goes to a good family. So your realtor will guide you through that aspect. But in terms of qualifying, this is basically all you need to know in order to see if you qualify for the home that you want to go out there and purchase. Thanks so much, and have a great day.